Greetings, members one and all of the Salivation Nation. Gold has settled at its highest since last April on Trade Talk Optimism, but then has taken a bit of a pullback after some news from the Fed. But all the other metals are up too. Let's explore from this article on Market Watch. Gold futures climbed Wednesday, scoring another settlement at a 10-month high, with U.S.-China trade talks supporting haven demand for the metal and expectations for a positive outcome to the discussions also feeding the possibility of higher gold demand from China. In electronic trading, following minutes of the Federal Reserve's January meeting, gold futures edged a bit lower from the settlement to $1,342.50 an ounce. The minutes revealed that after several officials saw the need for more interest rate hikes if inflation came in at above forecast, while others said hikes would be needed if the economy evolved as expected. The Fed had surprised markets late last month when it abruptly put future rate moves on hold. Ahead of the Fed news, gold for April delivery on COMEX, down 0.16%, rose $3.10 to settle at $13.4790 an ounce after touching a high of $13.4980. The most active contract posted its highest finish since April 19th, according to FactSet data. March silver was up 0.452%, added 21 cents, or 1.3% at $16 and about 18 cents an ounce, following a 1.4% rise Tuesday. There are many good reasons for recent price improvements in gold, among which is retreat in the dollar. Gold Agero, managing director of the RBC Wealth Management, said in a daily note, worries about a global slowdown, Brexit concerns, and now U.S.-China trade talks and U.S. politics are all extra reasons for investors to seek another haven, such as gold. U.S.-China trade talks that resumed in Washington this week after high-level discussions last week in Beijing. A deal on trade would be positive for the outlook for emerging markets to gold's benefit, some analysts said. While primarily seen as a safe haven, gold is highly exposed to the emerging markets, which make up more than half of its global demand, as said Karsten Menke, a commodities research analyst, and Julius Baer in a note, which is kind of interesting because usually if these trade talks work out well, seems like that might be good for the dollar. And if it's good for the dollar, typically gold suffers when that happens. So that's kind of but then again, sometimes a dichotomy of situations does mean that sometimes the push and pull of gold and silver prices in times like this, depending on these markets opening up, which means increased demand. An improving economic backdrop in the emerging markets and strengthening local currencies versus the U.S. dollar bode well for gold demand. This is particularly true for China, where gold demand had been lackluster for the past few years as consumers became increasingly concerned about the outlook for the economy. Metals-related news, Morgan Stanley said in a note Wednesday that it had recently closed its recommendation to be long gold, a position it initiated back in September. Among several reasons, it cited Fed pricing. Gold's renewed popularity had been linked to the expectation that the Fed is now done hiking rates. While this shift in pricing has boosted gold, it has also already happened. Meanwhile, palladium futures continued to notch fresh record territory after closing at an all-time high on Tuesday. March palladium was up 0.47%, added $8.20 to $1,462.10 an ounce. Palladium has been on a tear thanks to rising demand from the auto sector and tight supplies. And copper has kind of been resilient due to optimism that trade war talks will be successful. Chief market strategist at Walsh Trading, positive outcome is viewed as a positive for global trade. Still, with the global outlook for growth hinting at a slowdown, the outlook for copper will all come down to future economic data releases. That's hard to say, and I think that's also the case probably too with silver as well. But let's take a look more about these Fed minutes from Kitco and see what's going on and why we saw this little bit of a pullback with gold. Gold prices nudged slightly lower following the release of January's Federal Reserve monetary policy meeting minutes, with the overall market reaction remaining fairly muted. April gold COMEX gold futures were last trading at 1,342, down 0.19% on the day after hitting fresh 10-month highs earlier in the session. The January minutes revealed that the Fed officials discussed concerns around slower global economic growth, especially in China, noting that some downside risks have increased since the December meeting. The officials also noted that business investments had moderated, and it's important to keep a close eye on the financial markets. In addition, the minutes highlighted that there are risks to the U.S. economic growth, which had been moderating after last year's strong gains. On top of that, Fed officials confirmed that the Fed will continue to be patient and data-dependent when it comes to future rate hikes. Many participants suggested that it was not yet clear what adjustments to the target range for the federal funds rate may be appropriate later this year. According to the minutes released on Wednesday, several of the participants argued that rate increases might prove necessary only if inflation outcomes were higher than in their baseline outlook. When it comes to discussing the unwinding of the Fed balance sheet of securities, Fed officials said that the balance sheet runoff could end later this year. Almost all participants thought it would be desirable to announce before too long a plan to stop reducing the Federal Reserve's asset holdings later this year, the minute said. At the January meeting, the U.S. Central Bank signaled a dovish shift by leaving interest rates unchanged in a range between 2.25% and 2.5%, and stating that it will be patient on future direction of monetary policy. The case for rate increases has diminished, Fed Chair Jerome Powell said following the central bank's decision. I would need to see a reason for further rate hikes that would have to include higher inflation. The Fed also removed the December reference to some further gradual rate increases being warranted. The shift came after the Fed raised rates 4 times in 2018, and markets were expecting to see at least another 2 rate hikes in 2019. Analysts noted that the minutes did not offer any new information significant enough to impact the market. While the FOMC minutes did not contain any surprises, it appears short-term gold traders took the opportunity to take off some profits after the report and following recent strong gains, Kitco senior technical analyst Jim Wyckoff said. The recent change in Fed policy stance to one or more accommodative monetary conditions has been a significantly bullish underlying factor for several commodity markets, including the precious metals. It's also been bullish for world stock and bond markets. However, the minutes were slightly more hawkish than the markets anticipated, noted CIBC Capital Markets senior economist Royce Mendez. Many participants were unclear as to what changes would need to be made to the federal funds later this year. However, several still believed to be most likely paths and rates that was still higher than economic evolves as expected, Mendez said. Overall, investors are reacting to the ever so slightly hawkish tilt of several members, bidding up the greenback and pushing yields at a short end to end a little bit higher. So we'll see how this all plays out in all of this. But nonetheless, I think it is going to be fascinating to see where it all ends and how gold will rise or fall with this news. And we'll keep an eye on it. But here is the latest gold and silver prices and see where things fall here. And we can see palladium is back from its over $1,500 mark a little bit. And there's gold slight pullback there to under $13.40. Silver is hanging up above $16.10, which is good. So we're getting there. But nonetheless, it's going to be fascinating to see how this plays out in the end. So post your thoughts below about where these markets are. It's an ebbing flow, but I think that this is just a very small little hiccup, and I think we're going to continue to see the metals be up above $1,300 for gold, definitely through the end of the year is my view, and I think that silver will be hovering around 16. Who knows? 16 may be that new floor. I think we talked about 15 being the floor before. Gold or platinum and palladium? Boy, there's going to be a video coming on that very soon. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.